So our economy has evolved significantly in the last 5 to 10 years. There are business opportunities and investment opportunities out there that we didn't even conceive 5 to 10 years ago that are now making people 6 figures and 7 figures a year in very short spans of time. And I want to teach you in this video 2 of them, how you can get one of the best secured lines of credit funding plays to get into these opportunities and maximize them at scale. We're going to talk about it in this video. This one's going to be a banger. So this is JP from Blueprint for Prosperity. We're going to get right into it. So 2 of those opportunities, as you've probably already seen in the title or description, is going to be rental real estate investing, whether long or short term, and Turo, the ability to be able to basically play a rental car company to those needing to rent a car from you as a private user. It's a wonderful business opportunity for those who it fits for, and getting access to capital to acquire vehicles for your business is very important. Same thing for rental real estate, whether buying long-term rentals or short-term rentals. You need the proper funding in order to scale up effectively and grow out your business. And I want to talk about one of the most phenomenal relationship banking centered lines of credit out there that many of you may not even know exist or haven't heard a lot about. And that's called securities-based lending. This is a phenomenal line of credit. And I'm going to explain to you why. When you're looking to borrow capital for these types of businesses, you need something that's going to give you flexibility. And I mean that in the sense of the repayment options, low rates, and you need something that's liquid, because you want to be able to get in, acquire that asset, or get into that business deep. So buy your car or buy that property, get it in place, get it out in the marketplace, making money, and get your money back out and rinse and repeat that process. That's what you're looking for when you're doing stuff like Turo and rental real estate. And this line of credit is perfect for that. It's a securities-based line of credit. It is a relationship banking tool, most commonly available to those who are in the higher echelons of the banking system. And I'm going to explain what that means in a second. But I am going to say that there are a couple exceptions. You have platforms like M1 Finance that actually will allow you to exercise this line of credit at just a $10,000 securities portfolio, which is pretty impressive. But most banks and institutions are looking for you to have around 100,000 to 150,000 base to start looking into this product. Really more commonly, somewhere between 250 and 500,000 is kind of more the norm, but you can find them around 100,000, 150,000 mark. There are institutions out there. And again, a platform like M1 Finance in particular will allow you to do this at around $10,000 the last I checked. So what's a little bit more about this securities-based line of credit for those of you who aren't as familiar or don't know at all? It's basically when you take your capital, create a stock portfolio. Typically has to be a managed portfolio of some sort. So you're probably not going to be able to get into any type of annuities or insurance products. Some other products that fall too far outside of the brackets. You're going to want this to actually be in the stock market somewhere. Maybe the bond market as well might play a role. But typically the stock market is some kind of managed account. You could be in the S&P 500, an index, a mutual fund, whatever. But some kind of managed product is typically going to be the case. Again, once you hit that criteria, pending that institution, again, M1 Finance does it at about 10 grand, and a few other, these fintech platforms may have it. But most banks in reasonable size institutions, you're going to have around $100,000 in a stock portfolio to exercise this. But if you either have that or you can work your way into that, I'm going to tell you why this is so amazing as you keep listening along. So you take that money, create that stock portfolio. That institution is going to want that stock portfolio in most cases to be within their institution, somewhere on their private wealth management or wealth management side of their institution. Now, that having been said, there are lenders out there who are more in the private market, not as publicly well known, that will take your existing stock portfolio at another institution and put a lien against it for you and extend you a line of credit. They exist. But in most cases, you're going to want to actually do this within your relationship banking. So the institution you're banking with needs to offer a wealth management section. somewhere where you can actually invest with them on the other side of that institution. So now that we check those boxes off, you set that portfolio up, make sure you hit their minimum to get that line of credit or beyond it, because this is important about this line of credit. It's very sensitive. So if you're somewhere between 50 and 90% of that portfolio can be accessed amongst the majority of those lenders. They'll give you somewhere between 50 and 90% of that portfolio. If you have 100,000 with them and that's their minimum threshold for that line of credit, they'll give you somewhere between 50,000 and 90,000 of that portfolio. If your stock portfolio drops below that threshold, they can call that security line of credit on you. They can call that loan. So there's a quick caveat that you need to understand. Nothing is risk-free out here in this market, but it's still a phenomenal opportunity. Barring stuff like a COVID or 2008 crisis, you don't see below 10% dips in the stock market easily and often, especially when you're in a broad portfolio of the S&P 500. Not very common, so I wouldn't get too worried about that, but you want to be careful. You want to be careful. They can do that. You will read the terms and conditions or have that financial advisor or company tell you, hey, listen, if this portfolio drops below this threshold, we can call this loan due on you on some level. So keep that in mind. That having been said, let's get to the glitz and the glamour of this thing. So once you meet the criteria, you're in position with the right institution or lender who secures against. They put a lien on that line of credit, on that portfolio, They put a lien on it. From there, they offer you that revolving line of credit. And that is the beauty. That's where the beauty starts to begin. Because again, it's revolving line of credit. And because it's secured by a very strong asset, a stock portfolio, what does that mean, ladies and gentlemen? I always teach cash, credit, or collateral. When they have a high level of one of those three or more than one of those three, lenders get comfortable. They give you great rates and great terms. No different in this case. What happens is they're going to give you that line of credit, highly likely to be great interest rates, usually in the single digits. Now, interest rates are increasing. I can't quote you, but I'm just letting you know that in most cases, you're going to get some of the best interest rates they have to offer because they don't need it to be that high because there's a lot of security in this loan. So they don't mind getting, slow and steady on their earnings, on that line of credit because the risk is low. They have a collateralized asset. So interest rates low, revolving line of credit, that means it can be turned into cash, people. The most important thing when you're buying real estate or something like Turo where you need to buy vehicles, you need the kind of funding that can be used as cash. This is why business credit cards can get challenging. It's hard to use business credit cards buying a car or a home. It's doable, but it's usually expensive or some kind of niche, or you have a hard time finding out if it's fully legitimate. It's going to take a lot of work. You got to flow the money a bunch of different places. It's not as black and white as swiping the card and closing on the property, or swiping the card, buying the car. Most cases, it's a little challenging. Some exceptions, but it's challenging. This line of credit is perfect because it's, again, securitized. They don't need your credit for it. Big one, right? They don't need your credit. In most cases, they will not pull credit for this. So you don't even have to have great credit because it's collateralized. I keep telling you, once they have one of those big three I always teach you about, and that has been taught by other financial experts, cash, credit, and collateral. Once they have those in place, one of those in place, they usually don't press you about the other two. So that means they don't typically pull credit, single digit or at least really low interest rate compared to where things are relative to the market, revolving, and cash. That means you can take it out and write a check. You can go to closing. You can go to a car dealership, cash, and take down a property, take down a car, put it in your business, put it out there to make money, and use the money from that rental or use the money from that car to pay back on that line of credit and increase your assets. This is a beauty of this. So this is another thing that I want to bring to you. If you're really smart and want to get really creative with this product, you're likely going to be able to take down whatever property or the vehicle for your Turo business or your rental real estate business. If you're smart and you got the numbers working right, you should have excess cash flow. As I mentioned, the flexibility of the payment on this type of loan, they will do stuff like interest-only payments for a very long span of time, years in some cases, before they really expect you to pay down on the principal. You can have 3, 5, 7, or even 10 years before you have to pay any real principal on that loan. Depends on the product and the institution and the lender, but it's very likely that you'll have flexibility to pay interest only. So that means you get to take down this car or this rental real estate, and you can either take the excess capital, because if the interest payments are in, and it's, you might have insignificant payments on that interest payment. So most of that influx on those Turo, on your Turo car being rented or your rental real estate short and long term should give you pretty solid cash flow. Two smart ways you can use that is to either pay down on that asset faster, on that car or on that property. Or if you're really smart and want to get creative, put it into the stock portfolio. Put it in the stock portfolio. Why? Because you're growing your stock portfolio that's likely giving you a solid return in itself over time. You haven't even talked about that. And you're growing it. So guess what? You're growing your investment in the stock portfolio, and you're growing your line of credit availability because it's based on a percentage. 50 to 90%, depends on the lender. So you can probably go back in without having to pull credit. Hey, my portfolio is going up this much. It's going up that much. I want more on my line of credit. No problem. You're still within that threshold that we have for you. So here you go. What does that mean? You get to go do. Buy another car, buy another rental. You see where that's going? You see where that's going? It's brilliant. It's brilliant. If you can fit this product, it's brilliant. It's not going to work for everybody. It's a pretty high barrier to entry at, usually at upper 5 to 6 figures to get in on it. But if you have the stock portfolio, you have an old retirement at an old job that you didn't roll over, you can roll over into a stock portfolio. You have cash sitting on the sideline. You haven't been sure what to do with it. Get into a very stable index fund or S&P 500 or mutual fund or exchange traded fund ETF. Get into some simple stock portfolio that's going to be, moderate in return, maybe single digit returns, but also isn't going to dip at any given moment. It's stable. It's growing. Your money's working in 2 places now, and you can expand that portfolio, growing your stock portfolio at the same time and giving yourself more liquidity on your line of credit to take down more real estate or to take down more cars for your Turo business. I know it's a lot, but it's a wonderful opportunity for those that fit. There's going to be more content like this being put out, more lines of credit like this going to be put out. But this is relationship banking at its finest, people. If you can't see the opportunity in this, if you're already a rental real estate investor or a Turo business owner or an aspiring on either one, if you can't envision where this can go, I don't know what to tell you. So to all my pioneers out there, I want you to comment down below. Let me know where you are with your rental real estate business or your Turo business. How's the liquidity going and growing those businesses? Let me know if you're going to be able to take advantage of this line of credit situation. Let me know if you need banks and institutions that you need me to name and drop and do some research to let you know where to go for these. I can name dozens of them. So I'm leaving that up to y'all. But if you want me to give y'all some insight, I'll respond to you in the comments with institutions once we chat in the comments. So drop that down below. Let's get this video out to more investors and to more business owners, because people need to know about this. It's a phenomenal opportunity. Other than that, if you want to support the channel, there's some links in the description of my favorite credit cards at the time, mostly through American Express and Capital One. You're going to get some great welcome bonuses if you use those referral links. So it's a win-win way to support the channel without you having to come out of pocket. You can increase your, net worth by increasing or maximizing your borrowing capacity, as I always talk about on this channel. You can do so using the links in the description, getting in with 2 solid lenders, solid institutions, and growing your personal or business credit. Use those links down below to keep supporting this channel so this channel can keep supporting you. Other than that, to all my pioneers out there, thank you for tuning in. I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.